today we're going to be talking about the IPOs, right?
Okay.
So how do you pick, I mean, it's obviously not a science type of, type of thing, but how do you pick a good IPO, so to speak, what can you do, right? So there is, first let's go around, what is IPO, right? So for example, an IPO is, there's several ones. The biggest one is obviously Securities and Exchange Commission, where basically they have to file something called tombstone ad, and they basically, the company introduces itself, like Facebook had an IPO, Rocket, Mortgage had an IPO. They basically wanted to take the company public, and sell it to the public. So, and, have a stock generated and stuff like that. So, so vast majority of the IPOs are through the underwriter, like Goldman Sachs, Morgan Stanley, and there's several other ones. So somebody, Maurice admit. Okay, Maurice is here. So we have 3 people, you see? The more the merrier. Hi, Maurice, my friend. How are you, brother?
Hey, I'm on here. Let me make sure my settings are correct. I'm hanging in. How are you?
Good, my friend.
I know, long time
no see. I know.
No.
So, today we're discussing IPOs, and I just started basically an IPO base. How do you, pick an IPO that's basically to make you some money? Obviously, again, this is a disclaimer. Do not use this, to, if I'm going to talk about a certain stock, it's not a recommendation. It's just a tool. Yes. So, we're just going through a different variety of IPOs, right? One of the ones we started talking about is Securities and Exchange Commission IPO that's filed through Securities and Exchange Commission and using the underwriters, such as Goldman Sachs, Morgan Stanley, BMO Securities, whoever the underwriter is. Basically, the way it works is a bunch of underwriters get into syndication, which is they get together and they will basically make sure they underwrite that particular stock and offer it to, initially is, obviously they buy all the stock. The way it works is they buy all the stock. Let's say Facebook goes public, right? So the way it happens is the Facebook sells all the stock to the institutional underwriter. And so when they sell all the stock to them, so what happens is they buy it at a discount price, and then they have a risk, right? That let's say Facebook was offering, price was $30, and for some reason, they bought it for 30, for 29, and the stock tanked to 20. They're in the risk for that $9, So underwriters taking the risk. But if the stock goes up to 40, they make $11. So that's what they do. There's other, types of, obviously, you have a, private placement, IPOs. You have something called 144A, which, goes through, you only have, rich individuals basically, and you particularly pick them up, or you have a Dutch auction, which is also specific. They also call Dutch auction, where the specific investors are chosen and only the stock is issued to them, just like kind of private placement. They have special treatment. They're called, private offerings, so to speak. So just beware of something that re-IPOs, like for example, Levi Strauss, which is the, we all know it's the pants company, had a re-IPO. So they went public again last year. And, recently they were in the news because they got bought out by Target, I think. And so right now they're making a comeback. Warner Music Group also had a re-IPO, but it's a dangerous thing to look at those IPOs and make, spin-offs also be, but at the same time, maybe it's on a different subject, but Livongo, for example, just got bought out. So I'm talking about the other way around. Livongo just bought out by Teladoc. And would you buy a Livongo, even though both stocks are listed and the official merger is not up until November? Would you buy a Livongo or you buy a Teladoc? So, I mean, I would probably invest in Teladoc because they already bought Livongo, right? And then the stock did shut up, you know, because the Teladoc stock is 220, Livongo is 150. So, you know, obviously they'll probably do some kind of, you know, proportionate share offering, but just be careful with that. And, you know, like I said, spin-offs also be careful about. Next, what are the things you can do to learn about IPOs? You know, you can buy a book. It's called Life Cycle Trade. And I know, Chris, you know, Regina, you like to read books. So
Yes, I do.
yeah, so buy this book called Lifestyle Trade, and How to Win in Trading IPO on the Super Growth Stocks by Eva Bodock and Kathy Donnelly.
Mhm.
All right. The second thing you could do is there's something that's called an IPO Edge. It's part of Silicon Alpha. So you basically, you know, you would go to Silicon Alpha website, and this guy, you know, Donovan Jones has a website, and I think it's only worth $250 a year, which is opportunity to make a lot of money on IPO. Remember, IPO can take off like crazy, right? Beyond Meat, for example. Maurice is salvaging right there. Maurice, you like Beyond Meat?
I'm you know, I'm putting a cap on saying, man, I kind of missed out on that one.
Yeah. So that's you know, so you want to read up on it. You want to go to Silicon Alpha, and the way it looks is basically in Silicon Alpha in the website. You would look at the IPO calendar. You know, it tells you what it bought, and also further down it tells you analysis whether it's a buy, neutral, or or avoid IPO. So it kind of gives you an analysis whether it's worthy for you to buy this particular stock. Also gives you a link to the research for the company, gives you a link to the company website, give you S1 registration statement, which contains the financial statements, you know, and if you can read financial statements, you can kind of look at their, you know, prior financial statements and whatnot. All right, let's move on. Just to give you an example, how many IPOs had happened, you know, so far. So, you know, 2014, we had 178 IPOs. I mean, and that we're talking about, you know, that's a healthy year. 2016, we only had 87. So that also indicates it's a bear market, you know. And then, you know, this year, 2020, just jumping forward compared to 2019, 2019, we had 169 IPOs, which is a lot, less than 2018. But in 2020, we have, as of 9/1, 115. And the 8 and plus 12 2 weeks ago, 8 during this week past of 9/21, and 8 upcoming, up to 143 total suddenly. So we have another 3 months going, and we might overtake a 2019 IPO. So who's to say that we're a bear market, you know? You know, just to give you an example, in a bear market, if you have thin IPOs or no IPOs issued, that means it's a bear market. All right, let's keep going. So the IBD kind of tells you how to split the IPOs in 3 different formats. You know, first one, an IPO, kind of like an IPO, profitable IPO, right? You have to look at the revenue. Did they make money? You know, is their EPS looking good? You know, what's happening there? Second one, it is profitable. It is not profitable, but the sales are approximately 10 million or higher. You know, and so IBD likes about 100 million annual revenue run rate. So if you look at the annual revenue for a year, let's say Beyond Meat just broke a buck or just made money or were in the red last year, recently. So if they had over 100 million, which they did in sales, that's a good company in year annually. Then it's a good company to invest. And the third one, you know, mostly you would think about, you know, Moderna, for example. What does Moderna do, right? We went over this. They have, you know, a vaccine for COVID-19 that's basically, you know, kind of, you know, trying to make it in the market. Novavax and they don't have no earnings. You know, Nikola doesn't have any earnings. I'm just giving bad examples right now, but you know, basically those biotech companies will give you a good example of which companies are in the third tier. So you obviously want to be in the top two tiers. Third one, you have to be very careful with danger zone. All right, let's keep going. So what else can you look at? You know, so basically, you put, you know, if a company, you know, IPO has no earnings per share, no sales, I just gave you Moderna or Nikola, right? Then you basically, you know, you try to discard those. You try to, you know, put them on the side. That would be the last ones you pick, all right? If within those companies, they're saying that, it's, you, for example, you're going to break it by different, let's say 2 red dots, you'll give to the companies that has no earnings per share and or sales. That particular IPO was get 2 red dots. So that's how you're going to market it's not good. Then 1 red dot if the sales are at least 10 million in last quarter, okay? So that's going to get 1 red dot. You kind of look at it, but you know, we'd wait and see. The reason I tell you about it is because, let's say Twilio, right? Twilio was an up and coming company, and if you look at the stock right now, it's around $200 and somewhat when it, you know, initially had no sales and no EPS. I mean, would you look at a company like that? Then they start generating sales, and did they make 10 million in last quarter? Then you're going to start looking at it. You're actually not even supposed to be looking at the IPO until it hits 55 days into the initiation of the IPO. But let's just say it's Facebook or Google or Alphabet, then obviously it's worth your attention. And this is the indicators, okay? No, 1 green dot, you give it to the company that has a profitable IPO, okay? What I mean is, you know, is it a profitable company, you know? 2 green dots if you have, you know, current sales and EPS is 40% or greater last quarter. So if their EPS is higher than last quarter by 40% or greater, then you get 2 dots. That's best company. So as greener you go into it, as more dots you give, that's the companies you want to invest. 3 dots, current sales, triple digit EPS, meaning that 100%, 200% increase of the earnings per share from last year, you know, and stuff like that. Then you have 4 dots. So you have triple digit earnings per share and sales, okay? Remember we looked at that chart for everything, and the sales would be, you know, in triple digits and earnings per share. And then we'll look at it to see whether the certain IPO is thin, means the volume is low, and you know, Maurice likes to look at that. And yellow dot is a foreign IPO. For example, Becky was the foreign IPO, so therefore you got to be careful, you know. But that's the synopsis of it. Okay, so what's the landmine for IPO landmine, right? For example, is this IPO liquid? You know, life cycle authors use 20 million per day. Okay, that's your liquidity determination. If an IPO has a 20 million market value per day, so it's the shares times the price of the security will give you 20 million per day, then you know that's something that's investable. Then I still would, you know, stick with 10 million per day an absolute minimum, but always prefer more. Okay, so 10 million is a minimum, 20 million is the best liquid IPO. Okay, that's the ones you want to get invested in, and we'll look at those things. For example, this is probably a bad example, but Rocket. Oh, somebody just came in. Engano? How are you? Hello? Engano? Hello? Can you guys hear me?
Yeah, I hear you.
I hear you.
Well, we have a new person that showed up, and Engano? Hello? Can you hear me? All right, let me just continue. So this IPO is Rocket, you know. So the way you're gonna look at this IPO, basically, you're gonna see if per day, and again, this you can download from yahoo.com. Another caveat in Investment Business Daily, for new IPOs within 55 days, it gives you wrong data. So you want to use for volume, yahoo.com, and you can register for yahoo.com, it's free, and then you can download the volume per day and average and whatnot. And you don't have to create average, right? It's one plus the other and divided by the previous date, So, I mean, not divided by, I mean, it's divided by 2, sorry, depending how many you have an average. So anyway, for example, the Rocket, the first 2 days, amazing sales, right? You have a share volume, 112 million, total market value. Remember, we're only looking for 10 million. 20 million is the best. 10 million is the minimum. We have 2 billion. Second day, another increase. We have another 2 billion. Then it starts going down on volume. Look at this. It goes down by 12%, by 5%, 2%, 6%. And then right around 820, right around 819, it actually, kind of thins out a little bit, and then it increases again. But as we all know, what happened to Rocket, you also have to listen to the news, right? Is that they had issued a warning saying that, it's not sustainable for us to keep, what does the Rocket, mortgage do? They provide mortgage, right? They say it's not sustainable for them to, to hold on to the customers or keep continuing refinancing the homes because of the low interest rates. And in the future, eventually it will all go away once the interest rate go up. So they threw a caveat, and as you can see, their shares kept going down, 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 down. But the first 2 days were amazing. I mean, so far it looks good as far as the IPO liquidity is concerned. All right. So let's keep going. So we're gonna look at but we're kind of like looking at the IPO base, and we'll pick a couple to go into the IBD and kind of look through it. What we're looking for, and I'll get into concepts more, right? So are we looking to see on the IPO base, not all young companies normal can slim lingo. So no, many companies never have an IPO base, makes 15% statistics above more than impressive. Only one chance maybe to get a record book. Okay, IBD, meaning that not all of them make a statistic. So the IPO based definition requirement, left side high in the first 25 days. First 25 days, they want you to have sales more, they basically want to have an equilibrium falling more towards sales. So they have to be more demand. There's more sales and less shares, basically. If they see that with first 25 days, there's incredible amount of sales, which is the volume is up for the first 25 days, that's a great IPO, okay? Then basically it has, at least look at the triggers, IPO lengths of 10 days, okay? First 10 days, do not touch the IPO, okay? Make sure to see what are the triggers. Are the volumes up? What is happening as far as the, is this too thin? Is it not too thin? And then how to count 10 days, I'll get into it. And then, stuff like that. So we can look at one of the IPO, for example, let's pick Becky, I'm gonna stop sharing this one. Anybody has any questions, first of all? Hello?
Okay, so when you talk about investing in IPOs, wait, what platform do you still use the regular like stock trade when you're investing in IPOs, or do you use a different?
Yeah, well, you would use IBD Daily, you'd lose Yahoo. Yahoo you'll use for volume, okay? You need to learn how to basically look at the volume throughout the day. You have to have both running total, which is your average, and you should have your volume per day. If you see that the volume goes down below 20 million, that's not an investable IPO, okay? Per day. For the first 25 days.
Okay.
All right.
Yeah.
All right. Sorry if I'm not making sense. Maurice, any questions? Hello.
Sorry, I'm sure gonna some peanuts, but sorry. Yeah, I do have a question on Yahoo. Does it show the volume in terms of dollar amount throughout the day? Does it do that on Yahoo Finance?
Well, you only need it for 1 day, but if you want to, you see intraday, it doesn't do that. No, it's just going to tell you that yesterday we had a volume of 10 million and today we have a volume of 12 million. It doesn't tell you an average for a day. It tells you basically at the end of a day what was the volume.
It does show you. Okay, maybe if it's not too much trouble, when if free, you could just show it to me again, because maybe I missed it. I don't know if you showed it. I stepped away for a second.
Yeah,
I could
okay.
look. Yeah.
Well, hold on. Well, let's go to Yahoo.
Okay. All right.
It's Yahoo Finance, right? I don't know if you can log in here. This. We'll pick up any stock and then I'll share it. Okay. It's good. Let's look at Tesla. And then
we could see how much money changes hand. I mean, we could do it manually, right? But
so charts.
Thanks.
No problem. 1 second. Let me look at this. Oh, my portfolio. You gotta pick watch list. That's so let's say you put something on a watch list. It's telling me that. Okay, let's do Tesla. First, you have to add that. What the hell is this? Who is this? Oh, let me mute him. This is not good. One share. All right, so Tesla. Add to watch list. All right, now. Okay, on the Tesla. Oh, so here, visitor trends. Yeah, you got to sign in. I got to sign in. It won't let me do it unless I sign in.
Okay. All right.
I have to sign in. It's not a premium, but I have to sign in.
Okay.
So I mean,
too, but
yeah, I mean it does on my phone because I'm signed in. But basically, you can look at the charts, and in the charts it tells you the volume, just like the one we have, here.
Oh.
Here's the volume right here. You see? You look at the chart, and it tells you the volume right there on the bottom.
Yeah. All right. We could figure it out pretty quickly, I guess.
But you could download. I mean, we can look at it. You can download it, but if you put on the watch list and you sign in, there is a button you can press, and it will download all the shares, basically.
Oh. All right, I see. All right, so I have to play with it. Okay, cool.
Okay, so now I'm confused. Okay, so IPOs, like I know Tesla, are IPOs something that a company goes through all the time? Or is just like, I'm Regina Burgers and I decide to go public and I do an IPO?
That's correct. So Regina wants to raise money in public. So you issue shares, but before you issue share and go public, to do that, you have to file with Security and Exchange Commission to ask for permission to go public.
Okay.
To raise money, basically. There's two ways you can raise money. One is you can issue bonds, which you also have to go public, basically. Or you can issue equity, which is your stocks. So Beyond Meat, for example, it's a grass-fed burgers, right? For argument's sake, they do other things as well. But grass-fed burgers, they went public, right?
Right.
So what they did is let's say they issue 1 million shares. They went to SEC, they gave all the requirements, they filed all the forms. And then they said, okay, now I'm going to sell 1 million shares. They hired an underwriter. Underwriter basically underwrites it. And investment bankers are buying all the shares, taking all the risk, and then selling it to the public. I mean, public, I'm talking about in a very vague terms. Usually institutions buy it, like big institutions like Morgan Stanley, Goldman Sachs, Bank of Montreal, Bank of Nova Scotia. Those are huge institutions buy all the shares for cheap, and then they offer it to their customers through, let's say their customer is the teacher's retirement 401k. They say, buy the stock and then, it'll go up, and therefore your portfolio would increase in value, stuff like that. So they solicit and sell the stock that they just bought. But the risk has been taken by investment bankers. Underwriters are the one that offering it, underwriting it, so to speak, and taking it, not taking it public, but advertising they go on something that's called roadshow. So for example, if you have a stock, right, you have to solicit people to buy. So what they do is the underwriters, basically, they go on the roadshow throughout the country. I mean, it's a very vague term. It's not, they don't sit in the car and drive around and say, here's your stocks. They basically, let's say they fly to Canada and they talk to, large institutions, and they say, listen, would you like to buy our stocks? We're Facebook, and, we're the social network of the future and stuff like that. And people are like, okay, we'll buy your stock, whatever. And that's how they advertise it, Okay. And they invest, and then they sell to investment bankers who, because those big companies don't want to deal with a lot of the minutiae, selling it to Regina, selling it to Zach. They would never sold out. They have billions of shares. They want to sell out. They want to raise money quick. And the way you raise money quick is you sell it to the investment bankers, and they take all the risk. So if your market doesn't respond, like Beyond Meat, they responded right away, right? The price initially was priced at 25. It's laughable right now. Stock market is up, stock is at $169. They went from barely being $1 billion valuation to $8 billion in a matter of like several months. It's crazy. They're actually in 77,000 stores. That's how many not stores, it's relationships. So like Walmart, it's not just a store, right? They have all these stores around the country. That they're selling it to the sub that is actually by amount of franchises throughout the world, number one. They already had overtaken McDonald's. So they're selling it to Dunkin' Donuts. Now it's called Dunkin' Donuts. So they're selling it to a large company. So do you think this company would ever, reduce their sales? This is probably one of the best companies to invest in. It will never go out of business because everybody wants to be health conscious. They want to be eating, grass-fed, cows and whatnot. I mean, you have to be, so stuff like that. So I'm going to stop sharing, and I'm going to share the Market Smith. 1 second. Did I confuse you, Regina?
No, you clear. So it's just for new companies. So I would not be looking at Tesla for an IPO.
Correct. Tesla IPO had happened, I don't know, 2007.
Okay, got it.
Do you guys see IBD?
Yes.
Okay. So let's look at Becky. All right. So what do we see here? It's a new IPO. So what does Becky do, right? So it's basically a Zillow for China, right? So they're offering, so they're basically online advertisement for buying and selling housing in China. That's what it is. And if you look at their IPO, I mean, they started initially at, $37, $32, and $8.14 the IPO came. They already doubled it. So, and for this week, they're already up 584. So what do we see here? Obviously, you see a very crazy picture here, right? The market shot up so high, and the best determination, whatever goes up must come down. But the IPOs, so to speak, have no base. So how long this has been around? I mean, the IPO happened 8/14. what they teach us is for the first 25 days, do not touch. Make sure that you evaluated, what is the volume. So let's look at the volume, for example, right? The volume here, as you can see, is getting thinner. So initially, when it came out, it was 60 million, almost 60 million volume, right? Then it kept going down. It was already on the 821 is 37 million, and now the volume is at 5 million. Do we want to touch something like this? Remember what they say, has to be above 10 million in market value. But as we know, 5 million shares times 60 is going to give you that 10 million. But it's still dangerous because the value keeps going down and down and down. So you have to be careful with buying. But again, it could be they could have been really excited at the beginning, and now they're just leveling it out. But going from 60 million to a volume of 6, that's not a good thing. So otherwise saying, it have to be 25 days that we have to see sales going up, not down, all right? And it's not, it hadn't been, let's say on what is it, 8/14, 25 days would have been somewhere, on the 15th, 9/18, they already had a volume that went down by, almost, from 60 to 16 million. So I don't know if that's something that's good. So it has to be 25 days left side, which is sales have to be higher, not lower, okay? And then if you look at their earnings per share, remember, we put 2 dots, we put 1 dot if their earnings per share is in triple digits, 236%. Does this deserve 2 dots, 2 green dots? Yes, because their share went up 236, which is triple percentage. Their sales went up 71%, so it deserves 1 dot, okay? So it's like 3 green dots right there. So it's pretty investable as far as I'm concerned. The only concern I have the volume, okay? And it doesn't meet my volume, so I'm gonna keep watching this stock. Okay, let's look at Beyond Meat. Came right up. So
Look at today's action. Wow.
yeah, that's not today. That's weekly. Today is only 4 up. 4 up.
Oh, yeah. Okay.
Yeah, I'm on the weekly, so it's $4.24 up.
Yeah.
So let's look at weekly. All right. So this particular stock, when it got issued on 5/3, was priced at $45. I mean, if you knew that, and right now it's $193, would you have bought it, Regina, Maurice? Of course you would, right? So what happened to the volume? Look at the volume. The first 25 days, so from 5/3 to 5/30, let's say, the volume went from 36 million to 35 million, right? And it kept going up, right? So we want to have that sales be on, higher, always going up, or if it levels down, it goes back up. So within those 5 days, in fact, on the 6/21, which is past the 25 days, their volume had increased from 36 million to 81 million. That's the best stock there is. So therefore, that's an investable stock. So if you would have bought this, on 6/14/2019, right, at the price of, what was the price? $198, you would have made right now $110, over a year and a half, basically, which is not bad, and in fact, this stock has already been so far in the IPO, it's already created on 14 weeks ago, which was on 8/14, a pivot. So it has a top and a bait and a handle now. So, and means that this stock is only gonna keep going up. All right. So, but the initial pivot was at 167. So if you would have, I'm sorry, initial pivot, yes, was at 167. So if you bought 167, you already made on the 821, you would have already made, 30 bucks basically. I mean, 28, 29 bucks. So that's my point. So this was, their IPO is incredible. It's awesome. Another good example is Google. Alphabet. So look at this chart. It's ridiculous. I mean, it doesn't even go that far, but it just keeps going up and up and up and up and creating a basis. Like, for example, if you would have bought the stock at 14.16, you would have already made, a substantial amount, and that would have been on 4.3 and so forth, so on. So that's just my point. And that's basically an IPO. I'm going to continue basically looking at IPOs, and maybe next time we can download the Yahoo volume and kind of go through which ones are thin, which ones are not. But if you look at the Google, their volume is almost never thin. So for example, if you pick any day in the prior year, 2 years ago, 7/28, their volume was at 12 million. And if you look at, now, a day before, probably, it's about 7 million, 8 million, but it's an expensive stock, right? So it still doesn't go drastically down like the way that Rocket did, for example, or Beckett did, or let's look at Snow, for example. And Snow is a new IPO, right? So let's look at that one. Let's look at the volume. Look at the volume on the first day, 53 million. And right now, look how thin it is, it's 6 million. Do you want to invest in something like that? Absolutely not. Even though, look at their sales up 129%, but their EPS is negative, right? You got to be very careful. Their earnings per share are negative. So this only deserves literally 1 star because they have triple-digit sales, but their EPS is negative. So we're going to monitor until the volume picks up. This stock has just been issued on 9/18, so it's going to be a month on 10/18, right? And we're still monitoring it, but volume is already down, so that means the demand is down. All right, but look at the price of the stock; it's 240. And today, I think, how much was it up? It was up. It was actually down today for $6. On the week is up $13, so it's up 5%. But the volume I don't like. It has to be 25 days of sustainable volume and keeps going down. It went from 50 million on 9/18, on 9/25 it's 21 million, and and today was on 7 million. So that's not a good sign. Okay. So what is the other latest IPO? APIV, I think. Was it? I don't remember. If you guys want to look at any other IPOs that you wanted to check, Maurice, Regina, anybody? Hello? Did I put people to sleep? All right. Let's look at the let's look at the target list. First year IPOs. Okay, this is first year IPOs. Let's go through the ones that have the relative strength that is high. Okay. So this is the first year IPOs. Still time. Okay. So they issued IPO back in 11/20/2019. All right. And their starting price was $16. All right. So now they're at $83. Electric semiconductor fabless. Design and marketing reasonable. Oscillators and clock ICS to improve silicon timing system and solutions. So it's must be something to do with the chip markets, and because their competitors NVIDIA, AMD. So maybe it's something that you can look at right now. Look at the volume. It started with the 1 million, and right now, the volume at 460. We don't want to touch anything below 400,000, so it's close to that, but the price keeps going up, even though for a week it was down. But look at their competitors, AMD and NVIDIA. NVIDIA is crazy. Let's go to the next one, Bills.com. Bills.com initial volume was 11 million. Now the volume is about 4 million, which is not that far, but look, it also went from initial price of 34 to 110, okay? So look at their sales is 33, so it's one dot, but their EPS is negative. So what are other things that we can look at? So within first 25 days, it didn't exhibit much of a, but then right at, the year after almost, the volume picked up to 17 million, keeps going up. So it probably has to do with the fact that we're in COVID and people need their, services, but something to check into, you see right there, they're selling volume down as 29%. So we just looked at Becky. Let's look at Prelude Therapeutics. I think this was just issued, nothing, no data. I won't even look at this, even though they're up for, and they were up for a day. Actually, we're down for a day. But, so what do? Develops a pipeline for novel small molecular therapies for the treatment of cancer and rare diseases. So they have no sales and they have a negative EPS. And they just came out public, I think, on 9/25 at $23, and they doubled already. So next one, BRB Group, insurance brokers. Oh, look at their numbers, beautiful. So when did they initially came public? They were at $16, they're at 27 already. And their volume, really didn't get affected that much. I mean, on the first 2 days, first 10 days, don't even bother looking at it because volume is going to be crazy, up and down, up and down. But then look, it developed interest on 6/26, and now it's actually, it's a little bit lower on volume and, close to 1 million, but it keeps gaining. It's very slow growth, but it does. But look at their sales, 55. So that's really awesome. And look at their EPS, it's triple digits. So something that to look at. American Wells Corp, that one is doing really beautifully. For a week, it was up $7.47. It started with $22. It's already almost double, and their volume stable, but it's only been around less than a month. So instead of looking at Becky, this is probably a better and cheaper stock to look at, because look at their sales increasing by 94%, almost triple digits, but they're still negative EPS. So you got to be careful there. And what do? Provides telehealth services. Okay, so they're like Livongo and Teledoc. So why are they going up? Because they're providing that telehealth services. It's a platform to see doctors online, basically, and that's why. Maybe write this down, and that's going to be one of the good stocks to buy. Not a recommendation, I'm just saying.
Got it.
Regina, if you become rich, don't forget me.
I am taking you out to dinner and give you one good meal.
Just dinner?
One good meal.
just like before execution.
Yeah.
All right. Applied Molecular Trends started at 17 and they're already at 32. So what happened? Look at their volume shot up on 9/18, a lot. So, but now we're very down. So you got to be careful. 786, no sales and negative. What do? Develops a novel oral biological therapies for treat severe autoimmune metabolic inflammatory diseases. I know how serious this stuff are. So take a look. It really doubled. Oak Street Health. Oh boy. Started at 35, they're already at 52. Double-digit sales increases. 74 funds already buying it since the time that it was issued at 8/7. That's crazy. 74 funds already buying it. I'm writing this down. And their the only thing is the volume is down, so you got to be careful there. You know, within 25 days, we want. I mean, they kept the volume was keeping up, but then it went down. So you got to be careful. All right. Let's just finish it up quickly. Corsair Gaming. That's negative. Not interested. Four is a good one. So what they do is they provide integrated payment, services. I think we looked at it already. Integrated payments processing technology solution in the United States. They basically a credit card. I mean, not credit card. They provide payments to credit card companies where it's online bill payments, and those like PayPal's, Venmo, Zello. They making a killing right now because of the fact that Shift 4. I think came out at $31 was their IPO. They are already $53, $54, but it was a painful process. And their volume is still on. I mean, they started, let's say the next day, we take at 7 million, they're down to 3 million, and it still keeps going. So, and it's been 2 months already. So I think it's a good company to look at. The only problem is, like, if you look at their sales, they're down a lot, 21%. And their earnings per share is down a lot too. So, but the funds are increasing buying it. In September, 134 funds are buying it. So I don't know, maybe steer clear of this one. Next one, Accolade. Yeah, well, somebody just wrote something. Who's writing? Wow, great inputs. Sure. Oh, he's in Switzerland.
Oh.
Can you speak? So going to bed. All right, fine.
Can you hear me?
Yeah. You're in Switzerland. Where? Zurich or
Zurich.
Genevieve? Zurich. Oh, okay.
Yeah.
Great. All right. Hope you join us next Thursday.
Next Thursday, I'll do my best. It's just the time zone is a bit killing me.
Yeah. We speak French. We speak French here too. Just kidding. No, I'm just joking. I have my buddy who speaks French. I speak Russian, but if you're interested.
Yeah, but it's very interesting. It's very cool.
Yeah, bring your buddies too, and we go through. I mean, you missed the first 10 minutes. We went through how to pick the IPO stocks and stuff like that. So,
are you gonna repeat it next time or no?
Yeah, I could repeat it next time as well. So it's not an enticing thing for you to come and see, but next week we could start with that summary that I did. And good night, my friend. And all right.
Bonne nuit.
See you.
Accolades. So Accolades, medical managed care, and so what do they do? Provides personal health and benefit solution for people to improve their health care system. So that's obviously they have a modest increase, 25%, but their EPS is negative 29. So let's move on. GFL Environment. Yeah, let's move on here. PPD, I don't see anything attractive here. PPD, Medical Research Services, terrible numbers. Let's keep going. Berkeley Lights, Medical Bio, negative sales, no good. You see, a lot of them are not, as we go lower on the strength, it's really not worth it at the time, Forma Therapeutics Holdings, all right? Look at their sales, negative 100%. How do you go from to negative 100%? That's not good. And the last one we'll do is Vital Farms, and then we'll split. And then if you have any other questions, let me know. Vital Farms actually incredible numbers, 84%, and it's a new IPO. 30, it started at 34, and it's only went up $4. And look at the volume. it's nothing now compared to on 9/18, the volume was at 2 million. Now it's literally nothing. So that's that. Any questions, my friends? Anything I want to look at? You want to do the breakout stocks today? Let's just take a look what broke out today.
Yes.
All right. Pool Corporation. Oh my God, it's expensive stock. Retail leisure products. Operates 273 pool equipment and supply centers in North and South America. So their sales are up 14%, but remember we need 25%. And EPS is up 23%. So something to look at. But look at their volume shot up today. It went from, 2 million and it quadrupled to 9 million. So something to look at. Why? Because today they actually had a breakout saying that this was a pivot for them to buy. So for the week, they're up $18. For a day, they were up $9. And we have to look at the news, what happened. But average daily volume was 452, while today's volume was at 9 million. So something to look at. The only thing is, they're actually 5 out of 197. So it's like you would think it's some people that obviously have pools at home, they need to be maintained, and this is a company that maintains them. This is probably, since people are sitting at home, this is a good company to be investing in. So take a look. And it broke out today. And go ahead.
Hey, Zach, I was wondering, like, I know I seen this a couple of months ago. I think they pulled it up on investors.com or IBD.
Yeah, it was $156.
Yeah, there's the previous, breakout. Wow. What, that was in March? Oh,
there was in April.
April, yeah, that was.
And then before that.
And then a little bit after, yeah.
So if you would have bought that in April, you would have doubled your money and more.
So maybe it's not so seasonal, but that's pretty good volume. Hold on a sec. Let's look on the left for a second.
Where?
The return on equity.
Oh, return on equity.
Which on the left, that's pretty high, and the earning stability, which means it's like a little stable-ish. This is interesting, yeah.
Look at the funds that are buying it, bro. Yeah. 836. I'm writing this down. Even if you bought 10 of this is still looking good to me.
They have a dividend too, a little bit of a, yeah.
Yeah, I mean, it's obviously not Pepsi Cola.
Oh,
if you wanna,
and we got on the RS, we got a blue dot. So that's like, the blue dot is new bolting, RS or high RS.
Yep.
I didn't know about this. This is interesting. Okay.
All right. Next one is Corvo. So what do we see here? It broke out today. Not today, but actually had I don't know why they're saying it broke out today when the last handle they had almost 18 weeks ago, the bottom of the pivot, 108. So now they're saying there's another pivot here, and it literally 125. How much did it make today? Oh, it's only 30. I don't know if it doesn't look at the sales are only up 2%. The EPS is only up 10%. Nah, I don't think this is a good company. Let's keep going. RPM International. What do they do? Chemical paints. Sales are up 9%, but EPS is up 52%. I mean, obviously, because it was negative last time. I don't know. I mean, what do you see here, my friend? But look, they're saying they're the new high, but it's still not 80%. It's close to 80% relative strength. So,
was there a blue dot on the daily? Or this is the weekly?
Weekly.
What's the
volume? I don't know. The volume is
went up
2 million. Yeah, It's quadrupled. The average volume 511, this is at 2 million.
RPM is this?
It's RPM. Yeah, write this down.
Okay.
All right. Next one. Qualcomm. Oh, Qualcomm broke out today. That's exciting one right there. Oh, but look at their sales at negative 49%. Oy. They're Regina, they're a 5G company. They're like Nokia and Ericsson, but they're much further down. Design CDMO and off-base ICS and system software used in wireless headsets, modem cards, and networks. So we might. Oh, the earnings are probably coming up. That's why.
The 27th.
Look, volume is 27th, yeah. Earnings per share is in 27 days. So that's probably why people are loading on it, but it was up today a lot. Well, not today, for a week. It was actually down today. I don't know, it's very slow moving stock, but it broke out today. So I don't know, what do you think? The buy point was at 57. So, and that was back in March. I don't know. If you bought at 57, you obviously made $70. That's pretty crazy.
Right.
Yeah, but it's a good stock. I mean, look at their competitors, AMD, NVIDIA. I bought AMD today.
Oh, you got AMD. What's the new pivot price on this? The current one? Well, I guess I could see it there, 120 something.
Yeah, 120. I'm sorry.
Where'd it go?
I'm sorry. The new pivot.
The new one.
Hold on. It doesn't tell you the pivot price.
There it is. There it is. In the
which one is 123.97?
123.93 for this pivot.
Yeah.
Okay, so that's they're pulling it up as a new one. I see.
Spot base. Yeah. Okay. So that's the four stocks that. Let's see who is in a breakout mode near pivot. 22 stocks, but let's just pick the ones with relative strength that are high. Cloudflare, software company. It doesn't have a handle right now, but it says 4% to pivot. I mean, pretty good sales, 48%. Volume is at 15 million. It's not bad, kind of stable. They're saying that on the weekly, 95%, weekly high. So daily, was it up today? It was up a little bit, but it's cheap. What does it do? It develops software and firewall routing, profit optimization, load balancing, and non-network services. I don't know. It's looking sector 9 and 197. The only problem is it has a negative EPS, but they all have negative EPS. So something to look at. Cloudflare, Net. It's called Net. I wonder how, it's a new IPO, I guess. It was an IPO last year, 9/20/2019, and the volume was at 31 million. And now the volume is at 16 million. So it's holding it up pretty good. And look, it has relative strength 95. EPS rating is 57 because it's negative. So I don't know. Clearwater. Oh my God, look at the EPS. It's 1,000%. But their sales only up 6%. What do they do? Manufacturing bleached paperboard and consumer tissue and lumber products. Something is good here. Bleached paperboards. I don't know.
What?
What the hell is bleached paperboards?
Paperboard. Yeah, I'm like, what?
That's what it says. Manufacturers of bleached paperboards, consumer tissue, and lumber products. I don't know. Do we need something like that?
I think that's in building. It sounds like more construction type of deal.
Actually, it says paper and paper products.
Hmm.
Almost sounds like, you know, Michael Scott from Office. Donald Mifflin.
Yeah, it's tissue and lumber products. That
All right.
bleach paperboard, consumer tissue and lumber products.
All right, let's keep going. We'll do a couple more. All right, Kinsale. Oh, it's an expensive stock here. Look at the sales are up 62%. The EPS is up 47%. The volume is kind of, you know, low at 475. So keep going. Low volume. Ricci Brothers Auctioneers. I don't know. Let's keep going. VF. This is an interesting one. VF is a medical equipment seller. Develops a cloud-based. Oh no, I'm sorry, I'm wrong. Yes, develops cloud-based software for sales, marketing, functioning for companies in the life sciences industry. So it's something interesting. Look at their sales are up 33%, and their EPS is up 31%, but the volume is down. So something to be looking at. Were they up today? Up $3 for the week. They're up $15, and it keeps going up. Remember, I told to what's his name, the Turkish guy, to buy this one because he was looking at the other one. But it's a competitor of Teladoc and I guess the Teladoc that bought Livongo, which is the online healthcare provider. So something to be looking at. I mean, the volume is kind of low, but otherwise looking good. Shutterstock, let's look at that one. $56, retail internet. Operates online marketplace to license commercial digital imagery for sale to media and marketing agencies. Negative sales, out of question. And very low average is 1.6 million. No, let's keep going. Best Buy, I'll skip that one. Williams Sonoma, let's look at that one. I heard they're killing it. 98 bucks. They're ready to break out. They don't have a handle right now. It's in consolidation mode, which is basically consolidating. The sales are only up 9%, and the earnings per share is up 107%. So maybe they closed some of the stores or something. But look at the funds buying it; they're increasing it. You know, from quarter over quarter, it's like it never stopped. It keeps increasing it. The volume is kind of down, 4 million. You know, yeah. I don't know. Maurice, what do you think?
For me, for Williams Sonoma,
Yeah.
go to the daily for a second. So the volume's not there. Well, the sales were a little bit low, but the EPS was a little high, was good.
EPS was high in triple digits.
07. I don't like the 9%, but you know, it doesn't mean it's not investable. If it goes past that pivot, above that pivot on strong volume, you know, I assume somebody
pivot of $100.
Let's see.
Oh no, consolidation $101.
101.
So,
yeah, I mean, if it's a high volume past the one-on-one, it's a maybe. But you know, look, I don't know. But according to IBD or according to their breakouts, I think they want a minimum of 25% on the sales and 35 on the EPS. So right. Unless, you know, I see like 1,000% volume on the breakout day, like 1,000%, I probably wouldn't do it. Not for me, but somebody else could, you know. It's just, it depends on the person, so.
All right, I want to do special notice ones. And the several ones I chose today were Hey, Sergio, how are you, my friend?
Good, good, good. Good to see you guys. Hi, everybody.
Yeah. Let's look at Etsy. Do you guys know what Etsy is?
Yeah, great company.
Great company. They provide for a type of single-handed or decoration type of online services to buy those things. So
It's like an eBay. It's like a platform similar to eBay for craftsmen, people that make stuff by hand, anything from like clothing to costumes to home decor, stuff like that, even reenactment stuff. That's where I get a lot of my stuff from.
So if you look at their sales are up 127%. Their EPS is for 130. Thank you, Sergio. Their EPS is up for 136%. Their buying point was at 141 and then 139 right now. They were down today $3, but for the week they're up $8. It's a good company to have, and it's probably good with Pinterest. Pinterest is cheap right now, so let's look at Pinterest. Pinterest at $43 right now. Their sales are actually only up 4%, which is weird. The funds are buying it at 715, and they are actually negative EPS, but the volume is up. But this company, believe me, this company is, volume is at 42 million. How can you go wrong?
Yeah, question. How does Pinterest generate revenue? Through advertisements?
Advertisements, yeah.
Okay.
So, I get a lot of the historical stuff there as well, like with pictures and different interesting, subject matters. But, they're 25 of 197 is internet content. Once they're going to get more funding and whatnot, they'll probably be as famous as Instagram and Facebook and all that other jazz. So let's go to the next one I wanted to see. So we look at Etsy. Etsy is definitely a buyable. Fastly today broke out. Oh boy, for the week it was up $20. On the daily, first of all, what's this type of company, right? Fastly operates an edge cloud platform, processing, servicing, security ring customers' applications. So it's a cloud platform. The thing is with Fastly, Kramer was screaming at us to buy it at like 70, and people weren't listening to Kramer. He was talking about VW and Fastly. Those are the two ones that he was talking about. But if you look at their competitors, Twilio, today it went nuts today. The last couple of days it went nuts. They were telling us that actually double platform, if you bought the 283, you would have made $16 in a matter of couple of days. No, it's actually a month. But Twilio is at $299. And remember, we just had recently talked about Twilio, and I think we talked about it. Sergio, when did you talk about it? In August, right?
I believe so. Yeah. I think middle of August.
Middle of August, yeah. It was around $223 when we talked about it. It went up by $60.
Nice.
Remember the companies we spoke about. All right, let's look at the next one. Alibaba. I had that stock actually, but I sold out of it. It's an Amazon in China, basically. It's 1%. It's actually 1%. 1 week from the pivot, and for the week it was up $12. For the day it was up $4. And with the market being down, that's not a bad idea. Until fact, look, their sales are up 30%, and their EPS is only up 15%. Their volume is steady at 61 million. It's a Chinese company, obviously. It's a retail internet, 17 of 197. Maurice, what do you think? Alibaba.
Yeah, for Baba, it's let's see.
They're saying at 261 was the buying point. I'm sorry, 299 was the buying point 5 weeks ago.
Well, I like the blue dot on the weekly. that
Yeah.
shows outperforming the S&P 500, but it's an
But their
index.
EPS is only up 15%. Is that a concern?
Potentially, yeah, potentially. It's a huge company, so you know, 823 billion. So their sales up 30, their EPS. These companies, right? They don't maneuver as quick as the smaller guys. It's a maybe. Something to dig deeper into. I mean, where are we now? 1%. You know, we're at the pivot point, but
I mean, compared to Amazon, it's worth 3,000. You know, so it's
yeah,
it's 10 times less than Amazon. And this
Amazon big,
and
yeah.
they're bigger than Amazon. And I mean, China and all the former Soviet republics and everywhere else. You know, Baba is sending it everywhere.
All those guys are, yeah. How many? 4,000. Yeah, it's a lot of funds.
Yeah, I mean, it
Yeah,
could be
it's
for long term type of thing.
you know, it's probably better. Yeah, for those long termers, I mean, probably better. You know, tough to say. Look, I'm just looking at it from the IBD perspective. I don't know if I would, but I might buy this.
All right. Next one I want to look at, it's called Alexion Pharmaceuticals. It's $123. Don't be scared, guys. So for the week is up $12. Their volume is incredibly up for 14 million, and it keeps going up. I mean, it was up in 9/18, and now a month later is up. We have to read the news on it. Actually, their sales are up 20%, and their EPS is up 18%. And their competitors are Novavax, Codex. So what do? So it develops therapeutics to treat hematologic and neurologic diseases and metabolic and inflammatory disorders. So I guess they're pharmaceuticals company. They might have came up with something. That's why they keep, you know, even though it doesn't even have a pivot. I mean, what was the lowest? I don't know. It doesn't even have anything. It's kind of like flatlining, even though they keep going up. What was it before COVID? So let's say 228 at 102, and it's 123 right now. So it's nothing to do with obviously COVID medicine, but something to look at. That's basically what I can say. The volume is up a lot, so I don't know. And the funds keep buying it, 2,000 funds. So, and then the last one I'm going to look at is EPAM systems. $334. Computer tech services. So what do? Provide an outsourced IT and lifecycle software development services such as design, prototyping, and testing. Outsourcing. So it's they're obviously into. I mean, their sales are up only 15%, and their EPS is up 14%, and the volume has been kind of steady but low at 1 million. And I don't know if I want to buy something at $34. So that's all I have. Anybody has any other questions? Any additions? Sergio, today we went over the IPO base, and just to give you a synopsis, we basically were talking about how to pick a good IPO, and there's a couple of things you can do for that. As you know, basically within 10 business days, make sure that you know there is a sales demand for the particular IPO, like Becky or Snow. And within, you know, and if there is no demand or demand diminishing and the price going down, then, you know, give it 25 days for it to, you know, to kind of rebound type of stuff. You look at their liquidity. So if you look at the daily volume, and if it goes below 10 million, then it's not an investable IPO. If it goes, I'm talking about market value, not shares. So you could have, let's say, an Amazon is 3,000 a share. So within, if they sell, you know, obviously you want shares to be at least over 400,000, but right. it's a lot of market value. So, and their optimal is 20 million market value. So you have to look at the liquidity of it. And Also, you have to look to see if their earnings per share is triple digits, like let's say it's 100%, 120%, or it's in double digits, and if it's earning per share and sales are in double digits, that's a good thing. But if it's in triple digits, even better. From prior day. Oh, somebody just texted me.
Okay.
Zach, everyone, thank you so much. Speak to you soon. We'll be in touch. Okay. Maurice is out. That's that. Regina, any questions, my friend?
No.
We went through a lot today, and know what? If any questions, you can drop on the our chat in WhatsApp. I mean, sometimes you guys disappear. I'm the only one texting there.
No. I do read the text message, but
no, like for example, if you want to buy a stock, why don't you just drop it and say, Zach, what do you think? Or Maurice, what do you think?
Okay.
Stuff.
Yeah.
So
I'm just taking it easy. I'm just taking everything in to make sure I fully understand before I just completely dive in. But
exactly.
I'm good.
Exactly.
I'm learning a whole lot, so I do appreciate you guys for sharing your information with me.
So, Sergio, any other videos you want to share with us, or?
No, I have not. I'm working on one, but I haven't really edited to my liking. I'm